Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Scott Bauer, CEO of Prosper Trading Academy. It is great to be with both of you, Scott. Before we get into your picks, you know when we have you, we got to get your big picture take. I mean, stocks have been riding high. The S&P 500 hitting record after record. Not to be outdone, the Nasdaq's playing in that mix as well. What's your expectation especially as we go through this week heading into August?
So I think you have to be pretty optimistic about everything that is going on here. And I have the trader mindset. I don't have an investing mindset. I've got the trader mindset. So what does that mean? That means I always want to have protection. So even though I may be long in the market overall or in individual stocks, whatever it might be, volatility is so low right now. The VIX is so low. Volatility in the S&Ps, the Qs, whatever it is, you've got to have that protection. So it's okay, stay in the market. I actually think the market looks pretty good, but I am absolutely loading up on my insurance just in case.
Okay, all right. Speaking of the trader mindset, let's talk about your first trade. You've got the Spider Gold Shares ETF on your list. It's been an outperformer year to date, but what's the trade now?
Sure, not just an outperformer, but if you look at the charts over the last 6-8 months or so, it is absolutely buy the dip. And we've talked about this before, that every time we've seen a pullback in gold, or GLD, it has been a buy. We're right at that level again here. Now, GLD did just dip below the 50-day moving average here, which has been tremendous support, but that buy the dip trend is still there. So with that in mind, I'm buying the August 15th, just going out a few weeks here, the 308, 315 call spread. I can pay probably about $1.70, $1.75 for that. And again, this is nothing more than just trading the trend. And while that trend is in play, I got to follow it.
Trading the trend. The trend is your friend. That's what that reminds me of. All right, Rick, what do you notice about this chart? All right.
Pretty interesting setup here for gold, and we can see that for starters, obviously, as Scott said, the overall trend has been up for a while. A pronounced kind of sideways drift, though, for a bit here. We have a ceiling around 317 at our red line, up a floor right around 293, but the floor hasn't been tested for quite a while here. And while I don't have that 50-day simple moving average, you can see our orange 63-day simple moving average has been supportive during the last couple tests here. These moving averages, they're not better or worse than each other. They're just kind of telling you different things. 63 EMA, 50 SMA would be oftentimes fairly close. So it's kind of showing that there's supportive activity at this indicator here right now based on that. So we can also see, though, that looking at the RSI, our measure of momentum, we were trending up for a while. We broke through our green trend line. We're below the 50 midline, but price hasn't really had any kind of notable breakdown. We did break through our trend line, but we're not even really making new lows or anything here. So holding up rather better than I think I might have expected if I were to just see this activity on the RSI. But anyway, to put some perspective on Scott's trade example there, 308 to 315 is kind of roughly this box here. 315 is roughly where we had our best closes here. So you'd be looking to capture a re-entry toward those highs there. If we were to look at our other studies here, volume profile and standard deviation channels, another really interesting piece of information here, all the heavy trading is up here on this chart. The point of control, 304.56, very pronounced heavy volume at these high levels here. I mean, this would be a very important point for the bulls to hold. We would want to, if you were looking for a bullish move, to work out of that volume area to take out those old highs. But to the downside, if you were more interested in that area, another big volume node here near about 295, some lows near 293.
Okay, Scott, I'm going to send it back to you. Any final thoughts you want to leave us with on this trade, especially when you think about any risk leading up to August 15th?
Well, look at what Rick just pointed out, 304.56 area, and I know we traded just below that today, but there was a massive amount of volume there, and it held. So is there any risk going into, the tariff situation? There's always risk, but that's why I always put a position on with 100% completely defined risk. And again, love the trend, follow the trend.
Got it. Defined risk there. All right, let's talk about your next trade. You got Tesla on your list. Today, it has a tailwind. But one day does not make a trend, clearly in this case, or at least this is a trend that's been trending in the wrong direction for those believers in it year to date. I mean, whew, this chart for Tesla. Tell us about your move here when it comes to this one, Scott.
Yeah, it is. It is up nicely today. In fact, as I look here, it's up about 3.5%. And the trade I'm going to talk about, when I sent this to you just about an hour ago, it's actually the stock has moved quite a bit further. So this is a nice rally back after the earnings sell-off, and I believe this sets up a nice fade in the stock. So we just got through, the 50 and 200-day moving averages here, and just like I follow the trend in GLD buying the dip, I think Tesla is really a sell the rip. So what I'm doing here is I'm buying put spread. I'm going out to August 15th once again. I'm buying the 305, 295 put spread. Probably do that for about $2 now, maybe even a bit less with this rally in the stock here. And until Elon can get out of his own way, I just don't see the stock really catapulting higher here. And again, 100% fully defined risk buying this put spread.
Okay. All right. So, Rick, you're up. What do you notice about the chart for Tesla?
A bit of a breakdown here, and as Scott said, a volatile name where things can really move away from you in a hurry on a news or anything like that. But we can see for the most part, kind of triangular boundaries were in play for a while here. We had one trend line going across these highs here. We haven't quite tested that one again, but another one going across these low points here, starting with our tariff news lows in April, a significant low point for so very many stocks here, but starting to break down a little bit below that trend line here. We did have a test of our purple 252-day EMA that came in at this area near 290, 295, around that region here. But it also coincided with our green line here. Repeated high points, then low points, once again low points here. So that gives us an interesting confluence to watch. And also that's fairly close to the level Scott was talking about, 305 to 295. That it would be like kind of around that area. It's kind of hard to draw because of the scale of the chart here. But as you can see, Tesla trying to re-enter that triangular type shape here. So this trend line area would be a pretty important test to see if that could happen, or if we would once again face a rejection and a subsequent fade here. RSI not really helping us out too much here, kind of a mixed picture, but once again crossing above that 50 midline, suggesting perhaps a slightly more bullish bias here so far. The bulls would want to take out those highs near 340. A quick glance at some of our volume and standard deviation channels here. We can see that a heavy volume node is right around here, 320 to 340 or so. That could be a congestion range for price to work through. Our linear regression line, our line of best fit based on closing prices, right around that same level near 340, an important area to break through.
Okay. All right, Scott, let's talk about the final trade. Actually, give me a final thought on Tesla, because you said different than the gold, than the GLD trade that you have. That's a buy the dip. This is a sell the rip. Any final thought you want to leave us with on Tesla, Scott?
No, again, I think the opportunity for the stock to move back down is pretty high here. And listen, if the stock continues to move higher, I can either roll my put spread or just exit it out. But again, I love following the trend. I think the trend is to the downside.
Okay, the last one on your list, PayPal. It's got earnings in front of us tomorrow morning. It has been an underperformer year to date. Year over year is a different picture, but this is the trader mentality. So where do you go from here?
Absolutely, and I really enjoy trading on earnings, especially taking advantage of really expensive implied volatility. When I look at the stock here, now that it is cleared through the 200-day moving average and on pretty significant volume, I'm really bullish. I think there's a lot of upside here to PayPal. So what I am doing, and I like doing this in earnings, is I'm buying a diagonal call spread. What does that mean? That means I'm selling this week's 85 strike call up above $6.50, $7 or so, and I'm buying the August 15th 80 strike call. So basically I have a $5 wide call spread, but because of the difference in the premium, the implied volatility, I'm doing it over a 2-week time frame. I'm paying about $1.90 for that. Lots of upside to this spread. It is 100% risk defined. So if PayPal does not give a good report or good guidance, stock goes down, 100% risk defined. But arbitraging is the way I call it. The difference in implied volatilities is a great opportunity, and it's a nice bullish spread.
Scott, well, there was an analyst I talked to earlier today from Macquarie who is constructive on this one. He has an outperform rating, and he sees more than 20% upside from here for PayPal. So you've got that to your advantage. Rick, tell us what you notice about this chart.
So the 82 level sticks out on this chart to me in terms of an upside target. That's where our red line is here. That's where we had an old gap and then low point and then high point here. So kind of in between 80 to 85 like we were talking about here. So that's that kind of general area would be where this trade was looking at. So we can also see to the downside, there's another notable level in our green line, 77 here. Lows around this area, lows, then breakdown point, and then high point. Now we've broken above that area here. So this level, 77, would be the downside area to watch out for. It's very common after a stock breaks out to the upside above old resistance that after the initial surge, there will be a pullback to prior resistance, which now becomes support. And then the hope for the bulls would be that the trend would carry on in the direction of the breakout. Certainly not saying it's going to happen or anything, just that 77 level stands out as a prime area of interest for where you might be looking for something like that to happen. We can also see RSI mostly hanging on. We are above our downward sloping red trend line there. And, we can see as well, if we were to look at our moving averages, they're all kind of clustered together. They're all on top of each other, suggests there's not really a strong trend. But we can see our yellow 21-day, the fastest one, starting to diverge and split apart from the others. Look for that to continue. If it starts to slow down and they start to go toward each other once more, it's a sign that the trend is perhaps slowing. So we can also see that we have pushed above our point of control and our volume profile. There's a confluence there with several other indicators, our old trend line, etc. 71 to 73 would be an important downside area. Now we are in the thick of this other volume node here near 78. So if we were to start to break downward, 77 would be the breakdown point. If we were to push upward above 79 or so, 82 would be the next point to watch.
Okay, all right. Scott, I don't know if you saw this today. PayPal launched this new feature to pay with crypto to deal with like cutting cross-border fees. So it's, very crypto friendly, and users in places like Guatemala can shop with a merchant here in the U.S. now using crypto. I don't know if you caught that in terms of your, what's fueling your trading views or if it was all technical. Any final thought on this trade, Scott?
No, I did catch that. I was actually surprised there wasn't more of a reaction in that they would have released that news today and not just on the earnings call tomorrow. But again, I think there's a lot of upside here now that we've cleared that 200-day moving average. And again, if it's a bad report, I have my risk defined. So it's all good.
Risk-defined trade there. That's Scott Bauer, CEO of Prosper Trading Academy, and Rick Duquette, our lead market technician. Thank you both, guys.